who can actually use equipment financing. Now, this isn't all the industries, but this is going to be most of the industries, okay? Businesses across various industries such as construction, manufacturing, healthcare, and transportation frequently use equipment financing. Now, again, those are the most popular ones because, again, that type of equipment is pretty expensive. And not only that, hello, everyone. Calvin Russell here, 850 Club Credit. Today, we're going to talk to you all about what banks don't tell you about equipment financing. Let's get right into it. So in this video, we're going to explain the following. Number one, what is equipment financing? Number two, how does equipment financing work? Okay. Number three, what is the importance of equipment financing? Number four, who can use equipment financing? And number five, the differences between equipment financing and leasing. Let's get started.
You know, running a business is a lot like driving. You have to stay on track, you have to navigate challenges, but most of all, you got to keep moving forward.
That's why you should take a look at Fairfigure, the fastest growing business credit builder, helping over 35,000 small businesses get funding and grow their credit.
Here's the best part. Getting started is so easy. All you have to do is just hop on their website, enter your email here, and then you're on your way to building business credit and accessing the funds that you need. Whether you're on the road or at your desk, Fairfigure is here to help you accomplish your business goals. So first things first, what exactly is equipment financing, okay? Equipment financing is a type of loan that allows businesses to purchase necessary equipment while spreading the cost over time, okay? The equipment itself acts as collateral, making this a financing option more accessible to businesses with limited credit history, especially for new businesses as well. It helps businesses acquire tools, machinery, or vehicles needed for operations without a large upfront investment. I've also seen this work too, especially if your business needs like a lot of computers or any type of equipment and is more than a certain amount needed to actually run and function your business. Next, how does equipment financing work? Okay, so number one, a lender provides funds to purchase equipment and the borrower repays the loan in a fixed monthly installment. Okay, number two, loan terms often depend on the cost and type of equipment and the borrower's credit worthiness. So even if your business does not have a certain amount of credit, you may need a certain amount of credit, or in some cases, you can actually have it where your business has a certain amount of revenue, or if it's been in business for quite some time, then you may be able to get away with not having the best credit score. So essentially, if your business doesn't have something, then you have to make up for it, and vice versa. If your business does have something, and then of course you don't qualify on your own, then that's where your business is most definitely going to come into play. Number three is once the loan is repaid, the business fully owns the equipment, though it may be owned conditionally during the repayment process because, of course, you're still making payments on it. Next, what's the importance of equipment financing? It preserves cash flow by allowing businesses to avoid large upfront expenses for essential equipment. Number two, businesses can upgrade to modern, efficient equipment, increasing productivity and competitiveness. This is one of the biggest things that stop a lot of people, especially like in the construction field, or if you're flipping houses, if you have a transportation business, something like that. Think about the type of equipment that you need to have and how often you have to replace that or should be replacing that. Okay, this can be a good situation for you for sure. Number three, the interest on the equipment financing may be tax deductible, offering potential financial benefits as well. Next, who can actually use equipment financing? Now, this isn't all the industries, but this is going to be most of the industries, okay? Businesses across various industries such as construction, manufacturing, healthcare, and transportation frequently use equipment financing. Now, again, those are the most popular ones because, again, that type of equipment is pretty expensive. And not only that, but they also have to keep up with certain maintenance and things of that sort. So it's much easier to get the equipment and then, of course, pay for it, swap it out, things of that sort. And this is the most popular way that a lot of people actually use equipment financing in general. It's also ideal for companies that need expensive machinery, vehicles, or technology to operate and grow. Even startups or businesses with limited cash reserves can qualify since the equipment serves as collateral, which means that it's an actual item. So just like a car, like when you get a loan on a car, if you don't pay for that car, they can come get that car. Same thing with equipment finance. And of course, they would rather not take that equipment. But again, it is collateral. So they know that it does have some value if the loan does default. Now, here are some of the differences between equipment financing and equipment leasing. Okay. With equipment financing, the business owns the equipment after completing the loan payments. Now, this is after completing the loan payments. Okay. Offering long-term ownership benefits as well. Number two, in leasing, the business rents, this is the key word, rents the equipment for a set period of time, after which it may return or purchase the equipment as well. Okay. Now, again, just because you have the equipment, whether you lease it, whether you finance it, you can also resell it. You can use it to expand your business where, you may have one project where it's using the new equipment, then one project where it's using the older equipment. You can expand your team and do that as well too. Or of course, a lot of times people end up reselling it to resale companies as well. Then leasing. Leasing often requires lower monthly payments, but does not build equity unless a purchase option is exercised. Not only that, guys, but you're able to build a relationship with the financing company that gives you the equipment financing, because you may need some other types of financing as well too. So think about that and consider that for the long term as well. Also, let me know your thoughts on equipment financing in the comment section below. Thanks for watching. Be sure to like, share, and subscribe.